right off the bat, have a question from last week. Peter Nardella. My question is today I traded APLD for the break of 640 at 1 o'clock. So let me bring up APLD. So, by the way, beautiful. Just a beautiful idea from yesterday. Yesterday morning, had an amazing alert on APLD. And great box checker on this thing, by the way. Really love this because many things. Now, a little bit higher float, but they got their blockchain play. They drop an artificial intelligence press release. And then the stock ran through 52-week highs. So it was very encouraging yesterday because it was, other than the float, it was really a solid box checker. Now, Peter's asking about today, okay? What I always like to do is focus on current. But one thing I will say is the price action on APLD yesterday was absolutely beautiful. Just all-day grind. A lot of pullbacks, but all-day grind. And then the number one reason this was at top of the list was it closed at the high of the day. So when we talk about those weak open ready greens, yesterday is exactly what we want to see. We got a hot sector stock, trading unusual volume, with news that closes at or around the high of the day, and also a 52-week high, which is what APLD did today. And then we were ready for that week open ready green, right? Very first stock, second stock I went over on pre-market prep, 8:33 a.m. APLD, week open ready green for a day two move, okay? Now, that's the one point that I want to make. Anytime you got a stock that's in a hot sector that has news and closes like APLD at those two critical points, high a day and 52-week highs, it's always a week open ready green. Now, Peter traded it at 1 p.m. at the 640 break, and his stop was $6.10, right under VWAP, and it was going well, and then I saw it dip, and then I sold it 660, and eventually it went much higher, and I missed a lot of gains. How do I control that? Is there a method of taking profits? Well, Peter, my man, Peter, and the thing is, you kind of answered your own question. So one of the things that so many traders do, new traders do, is what Peter did. You're struggling. Okay, you're new to trading, so what happens is, and I'm not picking on you, Peter. I was there at one point too, but so many traders do the exact opposite of what you should do. Now, what do you do? What is every trading book and video and everything always say? Leave your winners alone and cut your losses. Okay, let your winners go. Let them blossom. Let them leave the nest, okay? Leave them alone. Leave your winners alone. Now you don't leave your losers alone. Beat them. Like violence. There's a time and a place for violence, okay? Many times and places for violence. And when you have a losing position, you choose violence. Okay, you don't rationalize, you don't negotiate, you don't justify. Oh! Now, the point is, you had a big pullback. You got spooked, but it never got anywhere near your stop. Your stop was $6.10. It pulled back quick pullback. Right here, I'm guessing it was about 1:45 p.m. It pulled back, but it never got anywhere near your stop. So what you need to do is flip that script and again, leave it alone if it doesn't hit your stop. This is the thing is, it's a hot sector stock. All the things I've already said, I won't repeat it. And it's trending higher. You can't panic out because of a little pullback. Because what you're gonna do when you do that is you're gonna minimize your losses. You can't expect any stock to just always go up. Like every candle is up. There's gonna be selling, okay? There's gonna be pullbacks. But I think the number one answer is Peter, you were in the best slow-moving stock of the day, and you broke your plan. Like I'm the guy, those of you that have followed for a while, you know I'm the guy that's like, follow your plan, follow your plan, follow your plan. It's in your question. Your stop was 610. It pulled back about 10 cents. You freaked out and you moved on. Now listen, still a profitable trade. Congrats. But stick to it. Stick to the plan, my man. So, oh, and then the thing I do want to, man, I just wish. Where do you think Tesla's going to top out? Never. Like James, and when I give that answer, because when people hear all-time highs are coming, and I've said it many, many, many times, people start breaking their stop loss, okay? So you need to understand that you can never violate your stop loss. You always, 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 always have to follow that, okay? But if you're positioned properly and you're adding to a winner in Tesla, which is what I tell everybody to do with it, then just ride it up, okay? It's going to all-time highs. It's going all the way back. It's not, this Tesla's one of those ones where I say it's not if, it's just when. It is happening. Now, is Tesla going to all-time highs tomorrow? No. Is it going to all-time highs next month? No. Is it even going to all-time highs this year? Probably not, but it is going there. So if you understand that that is the plan, and if you add to a winner as it trends up, you don't get in too heavy too soon, then you just let it work and let it ride, okay? So I'm going to play you this from today. IMMP was beautiful, okay? And I bring this up because when it comes to afternoon VWAP patterns, okay, IMMP was a higher float stock. So we always want to be careful with those early in the morning. So please listen. And I bring this up because tomorrow, many of you are going to be on pre-market prep, and I'm going to be like, hey, high float stop. Wait till the afternoon, okay? Now, again, I know I wish I could share my screen, but just listen. This is from noon. This is from 12:01 p.m. today on IMMP. I'm going to start with the daily double because we're creeping up on the level. IMMP. Now, be careful. I'm speaking of IMMP, which is a cancer stock. IMPP is also running, which is that junk oil and gas stock. But just to be clear, I see a lot of people mixing the tickers up. They're very similar. IMMP, cancer stock, is higher float, but just a beautiful break in the morning highs, and we got that consolidation at VWAP. The entry would be 250. I think a risk would be a good risk would be basically at 230 level that was resistance from this morning. Remember, resistance tends to become support, so maybe stop out at like 229, slightly below that area. 20 cents of risk, kind of a tight risk, but it is a high float stock. So, remember our risk determines our goal. So when I look at, again, it's a higher float stock. I really don't think this thing's going to $5 today. Okay.
Famous last words.
That being said, I think it could definitely grind to 3+, okay? So a little bit tighter range, but that is determined a lot by the float, okay? That is the daily double down. Now, you'll notice we have a new setup. So I played that for you guys, and I want you to match that up with your charts on IMMP. And if you will notice that at the time I did that video, IMMP was up huge. Okay, it was up huge. And it was trading in a range in the 230s to 240s. And we talked about that 250 break. I talked about many things in that little clip, okay? And maybe a lot of it went over your head. I get that maybe a lot of it went over your head. But if you notice, I broke down every single component of a real trade, okay? I gave you the thesis. Like, why is this the stock? Like a lot of you, I'm sure, whether you follow people on Twitter or you're in other chat rooms, they'll buy some stock and you'll be like, why are you buying this? And they'll either won't answer you or they'll like, oh, it's blah, 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 blah. Okay. This was a cancer play that had a beautiful chart. Okay. Trading unusual volume. Yes, it was high float, but it was consolidating above VWAP. So everything is laid out. Okay. There's no guessing games. And then also, I give you a read on the overall market environment. Okay. I mentioned the fact that it's Wednesday. Okay. Wednesday's the slowest day. We have more realistic goals. Okay. We dial things back. We don't shoot for home runs like we shoot for home runs on Mondays and Fridays. Okay. Mondays and Fridays are the days we swing for the fences. Tuesdays and Thursdays, less so. Wednesdays, we get more conservative, okay? And that's something it's that U-shaped volatility that I've talked about. So we dial back the goals. I said I really don't think this thing's going to 5+. Went to 390, not bad. But also the risk management. And we use that 3-to-1 risk to reward methodology that, again, I use every single day. I've used every single day. Well, I almost said 17 years. I've used it for probably 12 years. Okay. Once I figured out this system, took me 3 to 4 years. Okay. That's something I don't know if we've talked about much. Like a lot of people, they're like, hey, Tim, all these, you talk about the 17 years and a lot of people will be just like, oh, you were profitable like day one. No. Took me 3 to 4 years to get consistently profitable, okay? Now it's been 12 years since then, but these are all the things that I figured out in that 3 to 4 years of absolute pain, okay? And that was the idea that when we look at goals, we base our goals based on what we're willing to lose. If we're willing to lose $100, we need to look at this chart. And we need to look at the range and the position size and be like, okay, is there a realistic potential for me to make $300? Or if the risk is $1,000, is there actually a realistic potential for me to make $3,000 on this trade? And with IMMP, hey, 250 break, 229 risk, and a goal of 3+, and it went to 390. Okay. Basically, there was $1.50 of risk for 20 cents of downside, roughly, which is what? That's 6-to-1 risk to reward. So all of those components added together is what creates a profitable trade plan. And you have to read the market environment. You have to read the news. You have to read the chart. You have to understand the float. You have to understand the volume relative to the average volume. And I know it is all confusing. And I know it is all so much. And I know I've thrown a lot at you during this. But I am telling you, if you do show up every single day to what I do in the daily income trader system, we do this literally every single day. And when I talk about that daily practice and that daily repetition, I'm talking about 30 to 60 minutes a day. Are you going to figure it all out in, a 15 to 20 minute webinars? No. Okay. You're not. But can you figure it out in a few months of 30 to 60 minutes a day? Yes, you can. What's the best scan for identifying swing trades? We have a scan that basically it is what I call the swing and the gapper scan. And it's part of some of the materials that you get when you join me in the daily income trader system. But basically, we're looking for hot sectors with unusual volume that are greater than $1 and they're hugging the 52-week high by 2% or less. So we look for stocks that are within a 4% band of the 52-week high, that are higher priced, that have news and are in sectors or in hot sectors, okay? And again, I got the scan on my screen right now. I know you can't see it because I can't share the screen because I'm an idiot or Facebook's an idiot, but that's the scan. That's what we look. What's your thoughts on a trailing stop loss, Joy? Only in swing trades, okay? So the thing with a trailing stop loss in very volatile stocks like an IMMP or a Zila or an SMFL, the problem is what happens if you have a trailing stop loss in very volatile stocks, the stock will just blow through your stop and you won't get executed, okay? So, and it's a great question, Joy. So, and I struggled with this. I struggled with this a lot in the beginning. It's you have to choose. I'm assuming you're a part-time trader, Joy, which most of you are. But I'm assuming you're at work, you're doing a lot of stuff, you got a lot going on. And you want to use a trailing stop loss in these volatile stocks based on the question. I'm assuming some things, maybe I'm right, maybe I'm wrong. But the dilemma is, and this burned me a lot because I traded part-time for 7-8 years. I had a business, I had a lot going on. What happens is, if you're talking about, again, like the Zilas or the SMFLs or the MOTSs or the IMMPs, is even if you have a trailing stop loss, you feel like you're okay. You're like, oh, okay, I put my trailing stop loss in, I can go about doing what I'm doing. But they move so fast that often they'll blow through your stop and you don't get executed. So you get like an alert and you're like, oh, geez, IMMP pulled back. Oh, but I'm out. I had a trailing stop. No, not always, but very often it'll just move so fast you won't get executed, and it sucks. Like, I've been there. Like, you're driving back from driving back to the office, and you're like, oh, hey, I'm good to go. I had my trailing stop. You log it. Of course, this is me. That's how old I am. That's how old I am. I'm thinking back to when I started trading when we didn't have mobile trading. I'm like, hey, bonehead, ever heard of an iPhone and like 5G? So I'm telling the story of where I was back when we didn't have indoor plumbing, before electricity, back when I was going back to the office in a horse and carriage. Anyway, I'd been there where, again, I'd be like, oh, okay, I'm okay. I got my trailing stop. I sit down at my desk and I'm like, whoa, wait a minute. I'm still in this thing. So my recommendation is, if you can't focus a significant majority of your attention, don't trade the volatile movers, okay? Like, here's the deal. You got a meeting at 7:30, okay? It's 6:50 p.m., okay? So at 6:50 p.m. right now, you got a meeting in 30, 40 minutes. Don't trade stuff like IMPP, okay? Just don't, okay? You got the next day, you got the day after that, you got the week after that, okay? Like, and I know it's hard because you're going to be like, oh, like maybe you were on the Daily Double Down today, that video that I played, you're like, oh, IMPP is awesome. I agree with you, Tim. It looks beautiful, but I got a meeting in 10 minutes. Just don't do it. Don't do it, okay? Now, if you're trading stuff like AI, okay, AI, the stock, has been the #1 swing trade for about 10 days now. You can use a trailing stop on AI, the stock, okay? But you got to delineate those two. You got to understand that the odds of AI dropping 20% intraday and blowing through your trailing stop loss are very low. The odds of IMMP dropping 20% and blowing through your stop loss, they're probably 50, 60%. So, and it sucks. And it's like, it's Murphy's Law. Like invariably, like whatever your favorite setup is, invariably you'll have a meeting in 10 minutes. But the great thing about trading is, and you guys have heard me say this a million times, I know I've mentioned IMMP a million times today, okay? And I'm gonna end on this point. It's not unique, okay? IMMP is not unique. It was a very nice move, but I mean, it's like $2.50 to $4 in biotech land. We see that every single day, okay? So this is something that I preached to myself for years, is that bus station analogy, okay? The bus station analogy is, if you missed IMMP, wait an hour, wait 15 minutes, there's gonna be another one. And if you can control that FOMO, you can control that emotion, you're ahead of 90% out there. So, all right, guys, good stuff tonight. Every single thing I went over basically everything I went over tonight, we do a 1 hour video or 1 hour live webinar demoing that multiple times a day. Like I think Matt Monaco is on tonight, if I remember right. Let me click the link. I believe there is a 9 p.m. webinar. If you click that link and join, and I believe it's my boy Matt Monaco tonight. Click the link, check it out, and 100% free, hour long. So, all right, guys, have a great night, and we will see you next time.